Good morning, everyone. Good afternoon, good day. Well, hopefully we're gonna get an awesome week ahead. There's definitely plenty of things happening over the week, but really, what was the NFP? What was that? All right, so I'm gonna get a little bit in depth about the NFP, and then sort of dive a little bit deeper on what will the week bring to us, and from there we can continue to discuss. But before we go any further, guys, on the video, I would love for you to subscribe to the channel and give us a thumbs up. And if you have any questions, if you maybe unsure about any topics about the market, please, you have two options. First one, leave a comment. And second one, come on the webinars and answer and ask me those questions live every Tuesday to Thursday on Sydney time from 4 to 5 p.m. Okay. Also, don't forget to join the Telegram. Now we are more than 300 members, so that was pretty awesome. In less than a year, we were able to grow that Telegram community quite fast. So that is really, really great. I'm really happy about it. Going ahead, so let's just give a step back and go to last Friday and have a look into the NFP. The NFP expectation was above 100. The previous one was 140,000, 142,000 actually. The actual one came in at 70,000. 70,000. That was a big problem for from USA. So lots of things were happening for that reason to, for these numbers to pop in. So there is a reason behind those numbers. So also with that, the impact that the market had have suffered was immense. So we had euro dollar trading all the way from 117 down to 1.14. We had US dollar Japanese yen above 150 down to 148. We had gold continue to rally. We had DXY, so that's the US dollar index, that was above 100, so it was like 101 or something, and now back to 98, below 98, sorry. So there was a lot of things happening around that. And one of the most interesting points and why that, caused the market to react so quickly and so fast was because of this. As you can see on your screen right now, that's the CME. I've brought this chart a few times already here, but for those who don't know much about the CME is the Chicago Mercantile Exchange, and this tool specifically is called the FedWatch tool. So that is from the Federal Reserve interest rates perspective, what is expected by the market, why the, when I say the market, I don't say the price, I say the people that trade into the market. So banks, private funds, hedge funds, institutionals, and etc. So these are the guys and what they're thinking of the overnight swap rates interest difference. It's priced into that too. So in a very simple way to explain, it shows what the probability and what is the market expectations between a cut and a no cut for the next meeting. In this case, we'll be on September. All right, so it's a public tool you can access for free. Just type CME FedWatch tool on Google and then click enter. Most likely should be the first link and you will get access for this tool. So we can see that it's really priced in and ready for a 25 base points cut. Remembering that we are trading at the moment at 425 to 450, so it's always a band, so it's a range. And the expectations are at 25 base points cut on September. All right. The reason is exactly because of the tight labor, and also because of the all the DXY, all the long and short term bonds are actually decreasing in value. So all of this is making the market believe that there is the turning point for the Fed to cut another 25 base points. And that will drag the interest rates range between 4 to 425, okay? This is really bearish, okay, because previously the US dollar index was one of the biggest performance for the month of July, raising over 3.2%, and that we haven't seen in a month raising that much since August 2022. So that is pretty like 3 years all-time high in a sense of closing highs, okay? Not all-time high into the price, but all-time high into the percentage of the month by month, okay? So we had a really close, we have a really, really strong close for the DXY. So that was quite interesting. And after that, you know, 1st of August, that was on Friday, the month already like 50% of 50% of the whole return of the month of July has been erupted in 15 minutes on the NFP. Okay, so the main reason why the DXY was actually pricing higher and euro dollar was going down, US dollar Japanese yen was going up, GBP US dollar was going down, Aussie dollar was going down, etc., was because the market was specifying a Fed on higher for longer based on what Jerome Powell has been saying, that the market was stable, that we needed inflation to come back, to come lower, so we could cut interest rates, etc., etc. So that made everyone believe that, okay, cool, the Fed is on a higher for longer approach, and they actually were. I'm not saying they weren't. So they actually were, but with that now, the NFP coming at 70,000 and unemployment rate continue the same, and you know, average hourly earnings as well, that opens the door for a possible cut. Okay, because that's exactly what they want. They want less people employed, so less people will have money to spend, and inflation will continue to decline. Then the market, of course, priced in a really, really high chance of 70% chance of a cut from the Fed, and therefore cutting means lower return for investors. Lower return investors, they won't buy the currency, so therefore they're just dumping the money out from USA and putting into other places like Japanese yen, like Australia, over to New Zealand, over to gold, over to euro, over the pound. So basically, I see a very weak US dollar index from the coming months, and most likely we're going to see euro dollar climbing at 120, as I've mentioned before already. We're going to see US dollar Japanese yen decreasing to 140. Okay, so yes, it's a bit of a huge move, but for the quarter four, most likely we're going to see US dollar Japanese yen at 140. Okay, previously my target was 138, but now it's 140. Cool. So I've explained a little bit of what happened on Friday. I've explained a little bit of what was the context behind the explosive moves into the market. So now you know, it was basically pricing the Fed higher for longer, repricing the Fed higher for longer to price in a Fed cutting rates very soon, and therefore money flies out from US and flows into other economies, therefore increasing other economies' currency value and decreasing US dollar currency value. Cool. So what is on the week ahead? This week we do have a few things, but nothing too big, because majority of the central banks happened last week. So we have only the Bank of England central bank decision, interest rate central bank decision. We're going to have FOMC member Daly speaks, and then we have inflation expectations for Australia. But also most important, I think, is the FOMC members giving a speech based on what was happening from last week from the NFP. We really want to see what is going to, how the mind of them, did the mind change? Did something change on the approach through the rates? Did it not? Or how are they thinking now? So that's the most important point where I'm probably going to be looking at for the week ahead. I will be breaking those topics down into the webinar, so if you are free on those times, please join the Telegram. So the link on the Telegram for you to join is on the description, and it's working because a lot of people are joining us as well, so just make sure to join us. And every Tuesday, Wednesday and Thursday from 4 to 5 p.m. on Sydney time, I send you the link for free. No need to do anything, just into the link on the Telegram group. Cool. Guys, I hope everyone have a lovely week ahead. Don't forget, leave a thumbs up, subscribe to the channel, and I see you in the next video, or I see you into the webinar tomorrow. Cheers guys, bye-bye.